Hey folks, welcome you all to a new video. This is CA Ganesh Bharadwaj. So in this video, we are going to officially get started with a brand new subject called as management accounting. So as per our institute study material as well as per our handbook, the first chapter that we are going to see is regarding the introduction to management accounting. Now, before I start, let me tell you one thing very clearly. So, whatever I'm going to write here by way of annotation, and in fact, whatever I have already written in the previous lecture, so all of this will be given to you by way of a PDF. So, technically speaking, whatever I write down here need not be copied down by you, because anyways a copy of this, a PDF copy, a soft copy of this will be given to you for your easy reference. So you just need to listen whenever I'm taking a particular concept. You just need to listen and ensure that you have an understanding. Of course, if there is something that I tell by way of an example that I've just not written down, maybe you can take a blue ink and quickly scribble in your notebook in order for you to get an enhanced understanding when you are going to revise the subject later on. Are you clear with this? Yes. On that note, let us get started with chapter number 1, which is called as Introduction to Management Accounting. Now, in our study material, this chapter is a theory chapter. They have mentioned so many things. They have literally mentioned so many things. And if you see, look, there are a lot of things they have mentioned. One second. I'm just going back to, yes, the first chapter here. Look at this. So there are so many things they have mentioned here. Fine, there are so many things, like theoretically, they have just written down a lot of things. Anyways, I'm just not going to read down line by line. That's not the way this works. First, I want you to understand two things I want to tell you. Number one, just because the first chapter is more or less mentioned mostly in words, that is theoretically it's been explained, don't jump to a conclusion that this chapter, this entire subject is a theory subject. Absolutely not. The first chapter alone, since it is an introduction, they have given a lot of things, a background, how this started, the evolution of management accounting, what are the roles of a management accountant in a modern era. All of these things have been explained. Don't worry, it is not a theory subject that we are dealing. It is actually a practical paper where a lot of numerical questions will be involved. Of course, not in the first chapter, but as we move on from second chapter onwards, we'll be seeing a lot of numerical concepts. That is number one. Number two, I am not going to read line by line what is given in chapter number 1, that is the theoretical chapter introduction. Absolutely not. That is not the way it functions. If you were to read the material, you would have directly done it by yourself. Why rely on a lecture? So by way of a lecture, what we are going to do is I'm going to give you a value addition in terms of conceptual explanation, where we are standing, why we are going to learn this subject. All of this I will explain initially. That is sufficient for you to enter into the subject. That is chapter 2 onwards. Nevertheless, I will also quickly run through what has been mentioned in the chapter 1 introduction, just so that even from an examination perspective, some theory questions, if they are asking, you will be able to handle. And chapter number 1 in terms of weightage carries 5 marks. Okay, but beyond the weightage, for me right now, we need to have a proper launching pad to enter into the subject. If I read line by line, you will also fall asleep. That is the maximum thing that can happen. But right now, I'm going to explain a few things right from what you know, and I will take you from what you know to what we are yet to know. Okay, so from the known to the unknown is what we are going to travel with respect to this subject. So on that note, let's get started. Now, what is the name of this subject? Management accounting. So basically, by the word itself, you know that this has something to do with accounting, correct? Now, accounting, let me just broadly classify accounting. Let me just broadly classify the different branches of accounting. So, but till now, if someone says accounting to you, you automatically jump to the conclusion that accounting means what? Journal, ledger, trial balance. Then you prepare your financial statements like profit and loss account, balance sheet. No, that is your financial accounting. There are multiple legs to accounting. There are broadly 3 classifications, or broadly there are 3 branches of accounting that you need to know. So accounting is not just financial accounting. accounting broadly has three classifications or three branches, three disciplines. They call it as disciplines of accounting. Disciplines means multiple lines, multiple streams of accounting are there. Of course, the one is financial accounting. Financial accounting. Then you have something called as cost accounting. And then you have something called as management accounting. Don't worry, I will explain everything. Management accounting. Okay, fine. So for short form purpose, we will call this as FA, financial accounting, CA, cost accounting, MA is going to be your management accounting. TING. Okay, fine, right. Now there are three different divisions in accounting itself: financial accounting, cost accounting, management accounting. Sir, why do we have these many types of accounting, classifications of accounting? Because each discipline or each branch of accounting has its own objective to achieve. Clear? So it is not like, sir, accounting is one. No, inside accounting there are multiple aspects, multiple branches of accounting are there. Each branch has its own objective to fulfill, and that is the reason why we have different branches of accounting. Are you clear with this? In fact, in your CMA Intermediate, all the three of these branches of accounting you will be studying as multiple papers, For example, cost accounting is paper 8, no, specifically deals with cost accounting. Paper 12, this paper is management accounting. And yes, you also have a separate paper for financial accounting also. Correct? So paper 2 or 3, I'm not very sure about it. You have a separate paper for that also, right? Fine. So you will be studying all the branches of accounting. So first, let us understand what each of these branches of accounting do. That's when you will be able to appreciate the importance of management accounting. What is the exclusive thing that management accountants generally do in their real life? Only if you know that, you will be able to understand what we are going to do in this subject, management accounting. Fine. Now, first of all, financial accounting, it deals with, it records historical transactions. It records historical transactions. Sir, what do you mean by that? Now, only after a transaction takes place, you first journalize it. You pass a journal entry, then it moves into your ledger, then into your trial balance, and then it enters into your financials, that is P&L or balance sheet. That is, it's a post-mortem exercise. After a transaction takes place, you account for it. For example, when sale happens, you pass a sale entry. Purchase happens, you pass a purchase entry. When you purchase an asset, fixed asset, you pass a purchase of fixed asset entry. So here, the objective is to record whatever transaction has happened, so that you actually bring it, it boils down to debit and credit and properly present your financial statements. Ultimate objective in case of a financial accounting is to present the financial statements to the end users. That is the objective. It has a separate objective. Clear? Fine. Whereas here, if you see in case of cost accounting, it records historical as well as futuristic, or I can call it as estimated transactions. I will explain. So financial accounting exclusively records your historical transaction. Cost accounting records both your historical as well as your futuristic estimated transactions. Now, in paper 8 cost accounting, I would have explained I would have explained. Even if you have not seen, even if you have not studied paper 8, it's okay. Right now, I'm just giving an explanation that, for example, there is something called as overheads. Overheads means any other expenses apart from a direct expense. Indirect expenses are generally called as overheads. So anything other than direct expenses, which is called as indirect expenses, is commonly called as overheads. We use something called as predetermined rate, that is budgeted rate. Based on budgets, we actually may prepare the cost accounts. Why and all those details are a subject matter of discussion in cost accounting, but I'm just giving you an example so that even later on when you study cost accounting, you will be able to relate, or if you have already studied, you will be able to relate it now. So basically, cost accounting deals not just with historical transaction, it also deals with futuristic transaction. You need to prepare some budgets and estimates. Based on that, only the cost records gets prepared. Are you clear with this? Whereas in case of a management accounting, technically speaking, it is it uses both financial accounting data and cost accounting data. That is, management accounting has a very broader scope. It has a very broader scope. It uses the data utilized by financial accounting. It also utilizes the data used under cost accounting. That is present, that is all the historical transaction, future transactions, not just that. The reports presented under financial accounting, the reports presented under cost accounting, all of this are considered in this branch of accounting called as management accounting. Don't worry, right now you might not be able to understand it fully. Why and all that, there might be a lot of questions. Please patiently hear me out. I will slowly introduce you to the subject. So technically speaking, management accounting as a branch of accounting is broader in scope. It is huge in scope, and I'll tell you what it is meant for. Now, in case of financial accounting, you know what financial accounting is meant for. Whom do you report? It is basically meant for external reporting purposes. Correct? External reporting purpose. When do you mean by, what do you mean by external reporting? Shareholders, yes, shareholders are external people. They don't carry out the day-to-day management. The day-to-day management is carried out by the management, the board of directors, the top managers, the employees in the company. These are the people who are insiders in an organization. Anyone out apart from the management people are called as external people, outsiders only. So shareholders, then your government, etc. Shareholders, government, etc. So these people, so for these people, we need to, if we are catering to the needs of external people, so basically that is the scope of your financial accounting. So financial accounting scope itself is to what? Present the financial statements to the external users of an organization. Because, for example, shareholders, they need to know whether the company is making profit or not, whether it is worthwhile investing in the company, what is the balance sheet, financial position of a company as on a date, all these things. For government, obviously, they need to know whether the company is properly doing this business and how much profit they generate, so that out of that they need to pay taxes. So each of the users have their own reasons for using the accounting information. So catering to the needs of external stakeholders of the company is the domain of financial accounting. You already know this. Fine. When it comes to cost accounting, mostly, I use the word mostly. I'll tell you the reason. Mostly it deals with internal reporting. In some cases, external reporting is done. Within bracket, that external reporting is also only done to the government. I will explain this. Now I will explain this once we move to the next point. So understand right now, cost accounting deals mostly with internal reporting. In some cases alone, you will be required to report to the government. Whereas in case of management accounting, it is only for internal reporting purposes. It is only for internal reporting purposes. Fine. I have not even told you what is management accounting, but just wait. I will tell you what it is once we finish this chart. Now, financial accounting, maintaining your financial accounting records, it is mandatory. It is mandatory. It is mandatory. Mandatory under what? The Companies Act. Companies Act, Income Tax Act, etc. Income Tax Act, etc. So these acts will exclusively specifically ask the company to mandatorily maintain financial accounting data. So financial accounts needs to be maintained. That is a mandatory requirement of government by way of through these legislations. They make it mandatory. Now, in case of cost accounting, it is mandatory only for certain companies. It is mandatory only for some companies. This is prescribed under the Companies Act. This is prescribed under the Companies Act. If you want to be more specific, there is a section called Section 148 of the Companies Act that clearly lists which kind of company should maintain the cost accounting data. It will list the specific manufacturing and mining related companies that needs to maintain cost accounting data. So only those companies that are mandatorily required to actually maintain costing data will make an external reporting to the government. Other companies who are voluntarily following cost accounting as cost accounting records, those companies will only do an internal reporting. Internal reporting means what? Just to report to the top management, the board of directors, the managing director of the company. So only to them the reporting will be done by the accountants. But for that, to no one the reporting needs to be done. It need not go outside the company also. Clear with this? Only for those companies which are mandatorily required under the Companies Act to maintain a costing data, only in those cases, that too the reporting will be done only to the government. You need not make the reporting to the other people like your stakeholders and all. You need not make. Now, management accounting, if you see, it is absolutely non-mandatory. Absolutely non-mandatory. It is absolutely non-mandatory. Meaning what? Even that some class of companies, no, there is no specific legal requirement for you to maintain cost accounting management accounting records. There is absolutely no legal requirement for a company to maintain their management accounting records. Now, this is where you will get a question. Sir, when it is legally required itself, many companies are not following it. For example, a company is mandatorily required to maintain financial records. Correct. That itself, many companies are not practically, they are not doing it properly. Then management accounting, it is not even required. Then who will follow this, sir? That's where actually the subject becomes interesting. If you know why you are preparing the management accounting records, that is why you have the separate branch of accounting called as management accounting, you yourself will be convinced that there is no legal requirement for you. It is very much required for a successful management of a company. For a company to run successfully, management accounting is required. What is it is what I'm going to tell right now. First, let us place ourselves where I started. There are multiple branches of accounting: financial accounting, cost accounting, management accounting. Financial accounting deals with historic records, whereas historical transaction, cost accounting deals with historical transaction as well as estimated transaction, whereas management accounting actually uses data that is utilized by both the financial accounting as well as the cost accounting. It is broad in scope. Clear? And of course, in case of a financial accounting, it's done only external reporting. That is the objective for you to prepare the accounts and report it to the outsiders of the company, since it is mandatorily required under Companies Act, Income Tax Act and other legislations. Whereas in case of cost accounting, it is mostly meant for internal reporting. Internal reporting means what? So the accountants will prepare cost accounting and costing records will be prepared and they will report only to the top boss of the company. Top boss is whom? The managing director. Clear? That's all, only for internal purpose. Whereas here, and of course in some cases where it is mandatorily required by the government, in those cases alone, the reporting will be done. Apart from the internal team, the government will also be intimated. Whereas in case of management accounting, it is strictly internal, only for internal purpose. Top management alone, the reporting will be made. No reporting will be done to any outsider whatsoever. Now, sir, you have explained what what is the data utilized for each of the branches of accounting, to whom the reporting gets done, whether it's mandatory or not. First, what is management accounting? That you have not explained. No, sir. Yes, I'm going to explain right now. When it is non-mandatory, when something is non-mandatory, why will someone go out of the way and actually prepare some accounting data for the purpose of achieving this management accounting system, this management accounting records? Why will someone maintain if it is not a mandatory requirement? Fine, that's where we are going to get started with this particular area called as management accounting. Management accounting. Now, what do you mean by management accounting? It is that branch of accounting that provides meaningful information to the management. It is that branch of accounting that provides meaningful information to the management to help them take decisions in their organizations, is called as management accounting. Clear? I'm not going to give a theoretical bookish definition. If you see accounting, what do you mean by accounting? Recording, classifying, summarizing, analyzing. There will be so many big definitions. Now, forget all this. This I will give you with a proper example so that you will be able to understand. Once again, I'm repeating. What do you mean by management accounting? It is that branch of accounting that provides information to the management that helps them take meaningful decisions. So it is that branch of accounting that provides information to the management that helps them take proper meaningful decisions. Sir, okay, sir, you have said something. So basically your accounting data, that stream, that branch of accounting that provides the information to the management. What do you mean by management? Technically the top management, the board of directors. Of course, in management, you all know there is top management, lower level management, and top, middle, and lower level management. There are 3 levels of management. So basically all of them, what do you mean by management in general? People who actually run the day-to-day operations of a business. These people, employees put together, is called as management. Generally management is a higher level job. Correct? So any accounting data that provides meaningful information to the management that helps them take meaningful decisions, proper decisions. Sir, can you give us an example? Absolutely. I will just give you an example, and this concept, the example that I'm going to give you, involves some basic concepts that we will be seeing in a chapter called marginal costing. Even despite the fact, I will just give you a small example. It's easy for you to understand at this level itself, and this will enhance your level of understanding before we enter actually into the subject. Clear? Fine. Let me just give you an example. Now I'm just giving you an example. Fine. So, example. Now, let us say a managing director is present in a company. Managing director, he represents the top management. He is the top boss of the company. You are the management accountant. That is, you maintain management accounts. You actually prepare the management accounting, all these things in an organization you do. So what do you do? That's what we will be understanding by way of this example. Clear? Now, he says, look, Mr. So-and-so, Mr. Management Accountant. Okay. So we are very good at running the business. We are extremely successful. But suddenly what has happened? Some major recession happened in the market. some major recession. Let's take an example. There is going to be a COVID lockdown, a COVID coronavirus lockdown. Some lockdown is going to happen. This lockdown is going to be there only for the next month. 1 month alone. 1 month alone, the lockdown is going to be there. Now, he says, the managing director says, he is asking you he wants to take a decision for this 1 month. For this 1 month, should we shut down the business? That is, should we actually stop all our production, or should we continue the production? This is only for 1 month. This is not a permanent shutdown. Okay, this is actually a concept in marginal costing called as shutdown or continue decision. Okay, I am just giving that example right now so that you will understand what basically a management accountant does. So he is asking you, the company is very successful. We see a very good future also. The next 1 month alone, government has sanctioned a lockdown. Of course, our factory can be open. They have given all the permission for our factory to be open. The question is whether we want to shut down for the next 1 month. Is it worthwhile keeping the factory open and continuing our production for the next 1 month? Or should we also shut down and after 1 month shall we continue the business? This is the management decision that he's posted with, and he wants your help. He wants to take your help in arriving at a decision. What is the decision? Whether to shut down or continue in the next 1 month. Okay, and the following are the data. I am giving you the data, so just patiently listen to this. Following are the data. Now he says the next month demand, let's say the next month demand is going to be 1000 units. So he is saying this is the estimate. So you have got in touch with market analysis you have done. So next 1 month, even if we are continuing, maximum demand can be for 1000 units. Okay, the selling price per unit is going to be rupees 10 per unit. Okay, now there is something called as variable cost. Variable cost per unit is going to be rupees 5 per unit. I will explain what is variable cost. Then you have something called as fixed cost. Fixed cost is expected to be rupees 15,000 per month. Next month, the fixed cost is estimated to be 15,000 rupees. Okay, fine. Now, variable cost 5 rupees per unit, fixed cost 15,000 rupees per month. Basically, what do you mean by a variable cost? What do you mean by a fixed cost? Once I will just explain it to the extent relevant right now, because I will explain everything properly when we get into this chapter called as marginal costing. Now, variable cost means a cost that varies with the level of output. That is, only if I produce one extra unit, I will be incurring this 5 rupees extra. For example, an example for variable cost can be raw material cost. If I produce one unit, I will be incurring 5 rupees of raw material cost. Suppose if I produce 2 units, then for the second unit also one more 5 rupees will be incurred. Correct? So 5 into 2, 10 rupees will be the total variable cost, total raw material cost. That is the cost that is incurred, or the cost that varies with the level of production, is called as variable cost. Whereas, what do you mean by a fixed cost? The fixed cost is not dependent on your production and all. Irrespective of how many units you produce, the cost 15,000 will remain as such. For example, I can say this 15,000 could be a factory rent. Whether you produce 1 unit or you produce 100 units or you don't produce anything at all, 15,000 rupees of monthly rent needs to be paid to the landlord. Correct or not? Yes, so that is called as a fixed cost. A cost that does not vary with your level of production is called as a fixed cost. So now this is the data you have got. With this data, you need to actually give a recommendation to your top boss, managing director. What is the question he has asked you? Whether it is worthwhile for me to continue the next month. The next month, should I keep my factory open, produce 1000 units, or should I keep my factory closed? If I close my factory, I will not produce anything. This decision is only for a 1 month short-term decision we are taking. Clear? Now, after 1 month, anyways, I see a good market. We are going to continue. The question is for the next month alone, what should we do? This is the following cost data. Selling price per unit is 10 rupees. Variable cost per unit is 5 rupees. Fixed cost in total is going to be 15 rupees. Now, if you see a normal accountant report, not a management accountant. If you see a normal accountant report, so an accountant's report, I will tell you how it looks like. If you see a normal accountant, what he will say, what is the big deal here? First tell me what is the sales figure. Sales figure is going to be 10 rupees per unit. Next month, if I continue, every unit I sell, I will be able to get 10 rupees. And how many units we are going to sell? 1000 units, correct? So a total sales will be how much? Rupees 10,000. Rupees 10,000, correct or not? Yes. Then what will be my total costs? What will be my total costs? Fine, it's very simple. Total cost is what? Variable cost plus fixed cost. So for me to actually keep my factory open and produce 1000 units, what I will do? 5 into 1000 I will incur. 5 into 1000 rupees. 5000 rupees I will incur. Plus I also need to pay a factory rent of how much? 15,000 rupees. Correct, 15,000 rupees. So overall cost will be how much? This is going to be rupees 20,000. That is 5,000 plus 15,000, rupees 20,000. So if I continue my production in the next month, what will be my total profit? What will be my total profit? The profit will be negative 10,000. So profit means what? Negative profit includes negative profit. That is, there will be a loss, or if you want, I can write within bracket loss. So he will say, sir, so suppose you are a normal accountant, not a management accountant. So suppose you were asked to, advise the managing director. You will say, sir, no, sir, you don't actually next month keep it shut down only. Why? Because you are if you continue, if you keep your factory open, produce 1000 units and sell it, you will be incurring a loss of 10,000 rupees. Don't do it. Clear? So this will be what? This will be the decision that a normal accountant will give. The normal accountant will say, so decision, he will say, a normal accountant will say, decision, shut down. He will say, sir, shut down, sir. Please shut down, because there is going to be a loss of 10,000 if you continue the business. Are you clear? For the next 1 month. After 1 month, you continue. That is not a problem. Next 1 month, you don't do business. Let us shut down the factory. Let us all go to our houses. Clear? Suppose if you are a management accountant, how the report will be prepared, I will tell you. This is a very good example, not there in your study material and all. I feel that this is the right way to actually learn the subject. So if you were a management accountant, and if you were to prepare a report, now I will tell you how you will prepare the report. You will say sales, how much? 10 into 1000 units. How much is that? 10,000 rupees. Perfect. Fine. Minus variable costs. How much is variable cost? 5 rupees per unit into 1000 units. How much is that? 5,000 rupees. Correct. Minus fixed costs. How much is the fixed cost? It's directly 15,000 rupees. 15,000 rupees. There is no calculation. How much is the profit or loss? How much is the profit or loss? Profit or loss is going to be the same 10,000 loss. Sir, are you kidding, sir? This person also, accountant also said that is the same loss of 10,000 rupees. You are also saying there is the same loss of 10,000 rupees. What is the value addition as a management accountant you are giving? Wait. Now, this manner you have given here as a total cost, correct. Now, I have split it into variable cost and fixed cost. This is where it will enhance your decision making skills. I will tell you what. Now, if you were a management accountant, if I were a management accountant, I will present the data definitely not like this. This is a very bad way of presenting the data. I will present the data like this. What I will tell is, look, Mr. Managing Director, now next month, if you continue the operations, that is, if you keep the factory open, which means you're going to produce 1000 units, 10,000 rupees will be the sales, variable cost will be 5,000, Fixed cost will be what? 15,000. So the net loss is going to be 10,000, correct? Suppose if you shut down, that is, you are not going to produce anything. How much will be the sales? Zero, correct? How much will be the variable cost? Variable cost will also be zero. Why? Variable cost is incurred only when you produce something, correct? Now I'm not going to produce anything here. Variable cost will be zero. How much will be the fixed cost? Fixed cost will, I'll have to bear 15,000 rupees. If I'm just shutting down for 1 month, can I go tell my landlord that, Mr. Landlord, I'm going to shut down my factory for 1 month, so please, I am not going to pay the rent? He will not accept. You are having all your machineries inside, the place is occupied, he cannot let it out to anyone. So you need to pay the rent, correct or not? Rent will be there. If you continue, what will be the loss? 15,000. If you continue, the loss is going to be, if you shut down, the loss is going to be how much? 15,000. If you continue, the loss is just going to be 10,000. Or in other words, if you continue, you can at least minimize your loss by 5,000 rupees. In this case, a management accountant will come and say, sir, I am giving you a decision, or I am proposing a decision. It is better to continue. It is better to continue with a loss of 10,000 than to discontinue with a loss of 15,000 rupees. Now you are able to understand how a management accountant is able to come up with this data. Now what we did, sir, all the data was one and the same. The manner in which you utilize the accounting data to enable the top management in arriving at a meaningful decision is all that we are going to see in management accounting. The same 10,000 of loss only, that guy also reported, normal accountant. But what you did, you presented in a different way so that you can actually weigh the pros and cons of multiple scenarios and arrive at a meaningful decision. This is where a management accountant comes in. Are you clear with this? So if you continue, if you look at this, if you continue, this is going to be a loss. There is going to be a loss of 10,000 rupees. If you shut down, there is going to be how much? A loss of 15,000 rupees. You tell me which is better. Continuing with a loss of 10,000 is better than discontinuing with a loss of 15,000. This way, I just presented the same total cost as variable cost, fixed cost, so that I can appraise multiple scenarios and help the top management take meaningful decisions. Are you clear with this? This is a very, very basic thing that I've given you in management accounting. Don't think, okay, so we have completed management accounting. Absolutely not. We have just entered into it, and I gave you one proper example so that you will be able to understand. Okay, so now this scope of accounting, this line of accounting called management accounting, it has something in it. It provides some value addition. You need to get an idea right at the introductory stage itself. So I don't believe in, reading up all the theoretical thing. It helps in planning, it helps in control, it helps in controlling, communicating, coordinating. No. First, let us understand by way of a numerical example. So now are you able to understand how management accountant was able to convince the managing director in taking a proper decision? Just imagine, suppose he had listened to the accountant and said, okay, let us shut down. In that case, if he is shut down, you'd have incurred a loss of 15,000. Whereas if he had continued, you would have incurred a loss of only 10,000. Extra 5,000 at least he could have prevented. Are you clear with this? This is where management accounting comes in. Now, in this case, I have just told you, in thousands we are just doing. But remember, in real life scenarios, it will be running in thousands of crores. Let's say in the same question, it's going to be rupees in crores. Just imagine if Mukesh Ambani was posted with the same kind of a problem. You as a management accountant, if you have advised him, 1 month you would have saved 5,000 crore rupees. It's not a joke. That's why if you go to your study material and if you see, the cover page is there, no? So at the second page, if you see what institute has mentioned here, if you see in the cover page itself, clearly there is a mention. Behind every successful business decision, there is always a CMA. That is a tagline of our CMA Institute. So that is basically, and CMA stands for what? cost and management accountant. This is one of the most core papers in your syllabus. That's why this subject is very, very important. So now you tell me, should this be a should this be a legal requirement for a company to follow? No. All companies know the importance of management accounting. They don't want the government to come up with some laws to make this mandatory. They don't want the government to come up with law and legislation to make all these things mandatory. They themselves know the importance of management accounting. Just by having a proper management accountant in place, the companies can grow up the ladder. They can actually take proper meaningful decisions. This was one small decision. In real life, every day the top managing directors will be posed with multiple real life scenarios where they need to take a decisions. Who do you think they will approach? Of course, a management accounting team will play a very vital role in advising the top management to take proper decisions. So now are you able to understand what I mentioned here? It is that line of accounting that provides information to the management that helps them take meaningful decisions. Are you clear with this? So broadly speaking, I'm telling you broadly, have this in your mind. So in in chapter 1 exactly where this is mentioned, the study material, all those things you don't ask me, because all of these examples have just come up on my own. Clear? So now broadly speaking, there are two objectives of management accounting. Two objectives of management accounting. One is decision making. The other one is control. Decision making and control. Broadly speaking, every single chapter revolves around these two things only: decision making and control. Broadly, this is what a management accounting helps you achieve. The objectives of management accounting is decision making and control. Now in cost accounting, if you have already attended my lectures on cost accounting, I would have told you the objectives of costing are three. That is stock valuation, profit computation, decision making, control. I would have told that. If you have not attended, it's okay, just know right now. There, technically speaking, I would have also mentioned, the second and third objective, decision making and control, are not the objectives of cost accounting. They are the objectives of management accounting. That's why if you see, there are three chapters called as marginal costing, standard costing, budgetary control. These three chapters helps towards achieving the decision making and control objectives. Exactly those three chapters are also there in management accounting. So these three chapters are there in cost accounting as well as management accounting. Of course, in management accounting, apart from what you have learned in cost accounting area, some advanced level issues we'll be learning here in this paper. Are you clear with this? So technically, cost accounting and management accounting are hugely interlinked. That's why in the earlier version of the syllabus 2016, they had a single paper called as cost and management accounting for 50 marks. So cost and management accounting are generally, they go hand in hand. They are very interlinked, very interlinked. That's why in paper 8, strictly speaking, the entire paper is not cost accounting. Some management accounting chapters are also hidden inside your cost accounting paper number 8. That's why the same chapters are once again appearing in your paper 12 management accounting. So please know that the objectives of management accounting are broadly decision making and control. Are you clear with this? Fine. So now, sir, how does it help in decision making? I told you right now, this example I told you, we saw how it helps the management in taking a decision. Correct? Control. What do you mean by control? So basically, having control over something means what? You are knowing the state of affairs of a business and you are ensuring that everything is happening based on a target. So what happens? There is a chapter called budgets and budgetary control that we will be seeing. I'm just giving you a broad overview of that. What we will be seeing is targets will be set. That is, in the current period, the company has to produce 10,000 units. The cost per unit should not exceed 10 rupees per unit. All these things will be predetermined. Now, what will happen? The management accounting team will, they will keep on be monitoring whether the company has achieved the target of 10,000 units. They will go get in touch with the production team. They will see whether they have produced 10,000 units or not, and they will also ensure whether the cost per unit has gone beyond 10 rupees or not. This is called as control. So they will set some standards and they will compare the actuals with the standards, and they will come up with the differences called as variances. That's why we have another chapter called as standard costing and variance analysis. They will set the standard, compare that with the actuals, and then any difference between the two difference is called as variance. The variance will get analyzed, and based on the differences, if it is a favorable variance, they will reward the employees. If it is an adverse variance, they will punish the employees. For example, 10 rupees cost they could have incurred. Now the production team was so effective, they only incurred 8 rupees. Now that is a favorable variance. I like this variance. Reason? Yes, instead of 10 rupees, you have only incurred 8 rupees. That will increase my profit. So what they will do is the management accounting team will compile all these things and report to the managing director. Obviously, these guys will be the people, the production team in this case will be rewarded. They will get some extra bonus or promotion and all of these things. Suppose they should have incurred 10 rupees, they have incurred 12 rupees. In this case, it's called as an adverse variance. It is an adverse scenario. It reduces my profitability. We will be seeing that later on. In this case, what will happen? I will report, the management accountant will report to the top boss of the company, and of course they will take some they will penalize the employees, whoever are responsible for that. The responsibility will be fixed, and they will penalize the respective people. That's why you have a separate chapter called responsibility accounting also. See how interlinked it is. So if you see, all the chapters that we see here revolve around decision making and control. Control means what? Ensuring that the entire organization's objectives are going as per a plan. You have a plan, you compare that with the actuals, and then any differences between the two needs to be properly addressed. This is called as control. Broadly, to that extent, it's relevant, that it's enough right now. So these objectives of this chapter are two: decision making and control. Are you clear with this? So technically speaking, that's about the introduction. Now you tell me, management accounting as a separate branch of accounting, though it is not mandatory, obviously it is very much important for the successful survival of any business. So now, even if it is not mandatory, companies know the importance of management accounting, and they have a separate management accounting team inside, and this is strictly for internal purposes. Now whatever I did here, this analysis, now do you think this will be reported? Should this be reported to the shareholders or to the government? Why? This is for successful running of business. It's meant for internal purpose. This should not even go outside the company. In fact, at times, these are all confidential data. This should not even go to the outside world, because competitors are watching. They are looking at you. Correct? So all these things, in fact, the costing and management data, CMA data and all, is very, it's technically at times they are all some confidential data that should not be revealed. Certain cases it should not be revealed to the outside world. Are you clear with this? Are you all clear with this? So that's about a proper introduction to this particular subject called as management accounting. Now, and of course you also know that the objectives, twin objectives of this paper, decision making and control. Always have this in your mind. Now, if you see here, certain chapters in our subject helps achieve decision making, marginal costing, applications of marginal costing. There are chapters like that, budgets to some extent. These all helps achieve decision making. Some chapters will help achieve control objective, standard costing. So there is some chapter called as standard costing. Then you have a chapter called as transfer pricing and all, and that certain chapters like transfer pricing and budgets and budgetary control, they help achieve both the objectives of decision making and control. So how and all, it's too early to see about all those things right now. As we enter into every chapter, I will first give you a background as to why you are learning it, and then we will properly enter into the paper so that it will enhance your level of understanding in a very right manner. So technically speaking, this data, whatever we have seen right now, is absolutely sufficient for you to actually enter into the second chapter and move into the subject. However, there are some theory part mentioned in our study material that I have kept it as such in our handbook. Okay, we will quickly go through it. I am not going to read line by line. We will quickly go through it from an examination perspective. Maybe some maximum 5 marks they might ask you by way of MCQs or fill in the blanks or by way true or false, whatever it is they might ask you. We will quickly run through what is given in the institute study material that I have kept in the handbook. We will see that also, and then we will close this chapter, the first chapter, introduction. Clear with this? Yes. So now let's get into, so let's please take your handbook. I will just quickly walk you through what has been mentioned here in our handbook, that is typically what is mentioned in our study material. So this is where the chapter begins, introduction to management accounting. Of course, I have highlighted a few points. That's okay. Anyways, that is for classroom discussion. I will explain that to you. 1 second. Right. First, let's start here. Let's start with this. Let's start with, yes, let's start with this. So please take page number 17. Page number 17. So please take page number 17. First, we will see the difference between financial accounting, management accounting. Clear? Then we will see the difference between cost accounting, management accounting. I have just gave you an overview. Let's quickly do this so that in case an exam question comes up, you can be able to tackle it. Clear with this? Yes. So let's get started. First, the basis for comparison. Okay. Purpose. Why you are having financial accounting. Okay, it classifies, analyzes, records, summarizes the financial transaction of a company, basically to present the financial statements and give it to the external users. Broadly, this is the purpose. Clear? They have given some words. Please don't think this needs to be mugged up. Don't ever, no, that is a very, very wrong way of learning anything. Don't mug up anything. Read it once, understand, put it in your own language. I'm talking about theoretical areas. Fine. Predominantly, the subject is about practicalities. We will be solving a lot of numerical problems. Don't worry. This is not how the subject is going to be. But for completeness sake, I'm forced to do line by line, not line by line, forced to go through the theoretical part given in your study material also that I've kept in my handbook. So please, we will do this strictly from an examination perspective. But honestly speaking, the introduction to the subject has already been completed. But let us just go through a few things to give a completeness to this chapter number 1, introduction to management accounting. Whereas in case of management accounting, it helps the management take effective decisions about the business. I gave you one clear-cut example, shutdown versus continue example. I told you. Application. Financial accounting is prepared to give what? A true and a fair picture of the state of affairs of the company. That is the reason why you are having it. Whereas management accounting helps the management to take meaningful steps and strategize. What next? How am I going to run my operation? The scope is completely different. Whereas in financial accounting, whatever transaction has happened, I need to provide it properly I need to put it properly in financial figures and present it to the end users. The objective itself is different. Sir, do you mean to say management accounting is only good? Financial accounting is not that good? Absolutely not. Financial accounting has a different objective to achieve. Management accounting has a different objective to achieve. Don't compare the two for the sake of finding out which is better. No, it is not like which is better. If something is better over the other, then we'll only have the thing that is better. No, it's not like that. These are like multiple fields. Financial accounting is required for a different purpose. For external reporting, management accounting is required for a completely different purpose. That's why if you see in financial accounting, you have formats. You need to prepare necessarily your financial statements as per Schedule 3 of the Companies Act. Correct. Your P&L account, profit and loss account in a vertical format. Whereas management accounting, there is no formats only. It all depends on which scenario you are taking a decision. Today it's a shutdown versus continued decision. Tomorrow the decision could be whether to sell product A or product B. Any decisions. How can you say only these decisions a company will be taking? Scenario wise, you need to analyze the situation. You need to take a decisions. We will not be having any formats and structures here. It's all about how you deal with the accounting data. Are you clear with this? Scope of financial accounting. It is pervasive, but not as pervasive as management accounting. If you see here, management accounting, the scope is broader. So financial accounting itself is broader, but management accounting is even more broader. It is even more broader. Clear? It is like saying, if you are bad, I am your dad. Correct? There is one movie dialogue, something similar to that. Your management accounting is even more broader. Fine. The information type for financial accounting, it is only quantitative. Absolutely. We just deal with figures. Whereas in management accounting, we'll be seeing it deals both with quantitative as well as qualitative. Quantitative means what? Financial data. Qualitative means non-financial data. For example, there is something called as learning curve effect and all. Learning curve means what? Suppose you have appointed one person today, worker in a factory. If he is going to work for the very first time, you ask him to produce one unit, he will take, let us say, 1 hour. Okay, now 1 month down the line, he would have become experienced. 1 month of experience he had got. Now slowly, now you go and analyze, for every unit he will not be taking 1 hour, he will only be taking 15 minutes, slightly lesser time. If you go after 6 months and see, for every unit produced, he will be taking only 40 minutes of time. It's called a learning curve effect. It's called a learning curve effect. So these are all some qualitative factors that are also considered in our subject, management accounting. All of these things is not considered in your financial accounting. Clear? I just gave an example. Next, interdependence. Financial accounting is not dependent on management accounting, whereas management accounting is basically decision making accounting. See, they have given the name itself. It is decision making accounting, and it depends on the information created by financial accounting and cost accounting. I told this to you right here itself. I told you at the beginning. Yes, it is what? It uses both the financial accounting data as well as the cost accounting data. Look, we will be using all the data that we have. Any data we have, it is required for the purpose of decision making, because decision making is a broad perspective. For you to take a decision right now, you should have everything at your disposal. All the data, it needs to be, you need to have all the data with you. Only then you can arrive at a meaningful decision. It's not like just take one decision and leave it off. No, because every single decision has a financial impact on the business. You can take hundreds and thousands of examples of company that has fallen because of wrong decisions taken. That's the importance of having a proper management accountant in place. If you see companies like Reliance and all, they will be having, Mukesh Ambani will be having his personal advisor. He'll be having his personal advisor. Whether he's a CMA or not is a different story, but what he does in his day-to-day activities is management accounting. He has to evaluate multiple alternatives and come up with that best alternative that is in the best interest for the company. All these things are a scope of management accounting. Now, for him to arrive at this decision, he will use his past financial accounting data, cost accounting data, everything he will have. Mr. Mukesh Ambani will give him access to everything. Based on all the data, he will take a proper decision and recommend it to Mukesh Ambani. That's how it happens. So don't think that CMAs do not have as much signing powers as CAs. To be very honest, signing power alone doesn't determine your career. So there are multiple other aspects like decision making that needs to be done, that requires a lot of acumen, that requires a lot of intelligence and knowledge. So it's not that only if you have a signing power you will shine well. Absolutely not. Now these people who are all management accountants at certain companies, they treat management CMA and CA at par. Yes, they treat chartered accountants and cost and management accountants at par. If you see, I myself have seen so many job offers where they say required for the post of financial controller CA stroke CMA. So which means they are indifferent whether you are a CA or CMA. It's fine for us. So they are going to test you on your analytical skills, abilities and all that. If you need to take a meaningful decision, if you want to be a decision maker in an organization, this subject, the management accounting, is going to be very, very important. Fine. Statutory requirement, financial accounting, legally mandatory. Of course, Indian context, it's going to be Companies Act and relevant rules of accounting standards. Whereas in case of management accounting, no statutory requirement. Format, yes, specific formats are prescribed in financial accounting. No set of formats are there in management accounting. Who are the users of financial accounting data? Potential investors as well as all stakeholders, basically external people. Here it's only and only for the management, internal reporting. Financial accounting data is verifiable, whereas management accounting data is predictive and not immediately verifiable. What do you mean by that? Financial accounting data, it gets audited and all, and it's a past data. You can verify. Suppose sale, 5,000 rupees of sale has happened. You can see the sale voucher, verify it, correct? Whereas in management accounting, you cannot verify. We are going to take a decision. Whenever there is a decision making element involved, which means what? You take before a transaction happens, or you take a decision after a transaction happens. You take it only before, correct? Now, right now in this example itself, I told you the company wants to see where they are going to stand, where in the next month whether to continue or to shut down is the question. So we are dealing with futuristic demand. Next month, will it exactly be 10,000 1,000 units? Will it exactly be the demand? I don't know. We do not know. That is a maximum prediction. The prediction alone we are making here. We are talking about futuristic decision making here. Are you clear with this? Now, how do you know that, sir, next year 1,000 units will be the demand? Next month, the 1,000 units will be the demand. Maybe for me to arrive at the predictive figure, I used the past data, the last year, generally during this month, what could have been the demand for the past 5 years. I would have analyzed, and I would have also adjusted for the COVID issue and all that, and I would have arrived as a prediction. So this cannot be immediately verified. This is predictive and it cannot be immediately verifiable. Are you clear with this? So have the knowledge, have a conceptual knowledge, and automatically all these points you can write it on your own. Are you clear with this? If you sit and start mugging up, I'm sorry, that's not the way it works. Clear? So have a right perspective and start practicing by way of conceptual understanding in the subject. Fine. Next. We are going to see the difference between cost accounting and management accounting. We will see it here. So they have given all these things, all this explanation is given, it's not required. Directly, let's get into the tabular column. Meaning of cost accounting. Cost accounting revolves around cost computation, cost control, cost reduction. So there's something called as cost sheet that you prepare. In that cost sheet, you will actually find out what is the cost per unit, total cost, what is the selling price per unit, so total sales value. The difference between sales and cost is going to be the profit. So all these things you just find out. It's about it's about cost computation. That is, you measure your costs. You have multiple components of cost like material, labor, overheads, and all of those things. It's a subject matter of discussion under cost accounting. Basically, cost accounting revolves around stock valuation and profit computation. That is the basic objective. You will be seeing it there in cost accounting. So you need to value every unit of your stock. That is your objective, and arrive at the profit. That's all it is. Whereas management accounting, it helps the management make decisions, effective decisions, meaningful decisions about the operations of a business. Application of cost accounting, it prevents the business from incurring costs beyond a budget. Okay, that's why I said, sir, you told me, sir, this is control aspect. This is also there in management accounting, you told. That's why I said cost accounting and management accounting are highly interlinked. That's why even in CMA Inter also, there is only a single paper called cost and management accounting put together. Earlier, old syllabus of CMA was also cost accounting, cost and management accounting, single paper for 50 marks. Right now, they have made it separately. Management accounting has been introduced as a separate paper. So there also, to some extent, this is there. That is, prevents the business from incurring costs beyond a budget. Management accounting offers a big picture of how the management should strategize. So here also you prepare budget, not just the budget. You compare that with the actuals, and you will also, management accountant will also come up with ways as to how you can improve or strategize your business. The scope of cost accounting is narrow, whereas management accounting is broader. Cost accounting has only quantitative factors, whereas here it involves both quantitative and qualitative. I told you that learning curve example and all. Then cost accounting is one of the many subsets of management accounting. Meaning what? Management accounting is broad. Inside management accounting, only cost accounting itself is there. That's how they are representing it here. Whereas your management accounting is the universal set. Okay, that is broader in scope. This is slightly lesser broader. Fine. Basis of decision making. The task of decision making in cost accounting is very less. Even if there is some, it is based on historical information. Whereas this subject is all about decision making. Historic and predictive information is the basis of decision making. I told you, for the next month, how did they arrive that 1,000 units is going to be the demand? Based on past data in this month. In the next month is going to be, let's say, some month, Jan, Feb, or whatever, the Feb month is going to be the next month. Now, the next month, based on the past data, every February for the last 5 years, what has been the average demand, they will find out. Now, this month, there is one extra feature called COVID. Because of that, how will be the impact? They would have done all these things and arrived at a predictive demand for the next month of 1,000 units. That's why they are saying here, look at this. Historic and predictive information is the basis for management decision making. See how practically we are learning it. That's the way to learn. Please don't mug up anything. statutory requirement. Statutory audit of cost accounting is a requirement in some specified industries. I told you, section 148 of the Companies Act. That section is not required for our subject purpose, but you can know it for the purpose of understanding. So broader understanding, yes. So there is a section called as section 148, cost audit. Costing records needs to be mandatorily audited by a qualified CMA, cost and management accountant, and reported to the government. There's something called as CRA rules alone that needs to be maintained. But here, in case of management accounting, there is no such statutory requirement at all. And dependence, cost accounting is not dependent on management accounting, whereas management accounting is dependent on both the cost accounting and financial accounting data. And cost accounting is used for management, shareholders, vendors. Now, somewhere I differ with this. I differ with this point. No, cost accounting is used only for management, and wherever regulatory requirement is there, you will report it to government. But they have mentioned shareholders and vendors and all. I have not seen any company that has actually gone to the outside world and presented their cost related factors, because cost related factors are very, very confidential. So if you know per unit how much profit the company is making, just imagine, can this data go to the public? Then they will start knowing that you will not believe. In case of textile industries and all, the cost of manufacturing a particular shirt will only be 50 rupees. They will put some brand and they will sell it at 500 rupees, 450 rupees per shirt profit. Now all this data will be there only in cost accounting. Because product wise they maintain all this cost sheets properly and all. If this is being released out to the public, then the public will get really angry. No one will buy your products. But what they do is only financial accounting data has been mentioned. There they mention overall profitability. Product wise and all they will not mention. The company must be dealing in so many things. So all that entire consolidated profit will be mentioned. Apart from that, any common cost, everything will be going on there. So financial accounting external reporting is fine. Cost accounting external reporting generally does not happen, but anyways they have just given it, let's take it. And your management accounting is meant only for the purpose of management. Are you clear with this? So the difference between financial accounting and management accounting, the difference between cost accounting and management accounting, we have seen till now. Clear? So management accounting involves the interpretation of accounting information intended specifically to aid the management in running the business. This is exactly what we said. Interpreting the accounting information specifically for the purpose of meaningful decision making. That's called as management accounting. It is concerned with presentation of the accounting information and not with its preparation. So here we are not going to prepare the financials. All the data is given for us. Every data is given. The question here is, how do you present it properly in such a way that it helps you take a meaningful decision? And how do you arrive at, how do you aid the management? Aid means what? Support. How do you support the management in proper decision making? So accountant also reported the same loss only, whereas management accountant also reported the same loss. But the breakup of the overall cost into variable cost and fixed cost made the difference here. Are you clear? Suppose scenario wise I could analyze and I can clearly come up with a proper decision. Are you clear with this? This is where we are actually having an extra value addition in management accounting. Are you clear with this, guys? Yes. Next, the role of management accountant in modern business. Fine. So now let's quickly run through this. So apart from whatever we have done, so basically what are all the roles of management accountant in a modern business world? So tomorrow you're going to become a CMA. Fine, in future you're going to become a CMA. So what are the roles that typically revolve around a management accountant? First, planning and accounting. Accounting means what? Management accounting. That is, whatever data is given, presenting it in a manner in which it is helpful for the business to take decisions. And of course, planning part like budgeting and all of these things, you need to come up with proper regular time to time at regular intervals. You need to tell the management where they are going wrong, what can be fixed for the next 6 months. This is how we need to go. All these kind of planning and accounting related work you need to do. Of course, controlling aspect should be taken care of by the management accountant. Reporting regularly, you need to report to the top boss of the company. correct? You need to report to the managing director or the board of directors, or maybe even the top management in some cases. Yes, you need to assist the top management in finding out the root cause of unfavorable operations. In case there is an unfavorable operation, we saw that in the shutdown versus continued decision, that was an unfavorable area. So you need to clearly tell them the accountant's report is wrong. Look at, this is the scenario wise analysis I am making. Management accountant's report, now that makes more sense. Reporting, coordinating, obviously it's not an easy task. So if you see big companies like ITC or Reliance itself, you take, no, so just imagine the volume of Reliance. They have so many departments under their kitty. They have so many departments under the company. Now a management accounting sitting on the top needs to coordinate with all these people, see whether the company is actually moving in the right direction or not, whether it is going as planned or not. So it's not a one-man show. It's not a one-man show. There will be an army of management accountants sitting inside that particular line of discipline of accounting called management accounting, and they will be taking all these part. So coordinating is an important task. Then of course communication. So look at this, a wide range of reports need to be prepared. For every decision that you take, it needs to be backed up with the report, because today you take a decision, after 2 years, now your managing director comes and asks you, now 2 years back I took one decision based on your advice only, that I remember, but why did I take this decision? Why did you advise me like that? So now if we ask you that, of course, you can show him the report and clearly tell him that, look, sir, this was based on this report. At that point of time, we had predicted so many things, but later on things went on well or didn't go on well. So based on the report, you can also answer. So reports are always a prerequisite here in management accounting. So it's not like just randomly, orally you'll say, sir, go for this, go for that. No, you need to come up with a report and clearly tell him what it is. Clear, communicate the results to the superior by way of wide range of reports. Fine. Financial evaluation and interpretation. So the financial data needs to be properly evaluated. It all bogs down to the same thing, whatever we did in the shutdown versus continue example, and interpreting the results and telling them, sir, whether to shut down or to continue. Tax administration, of course, is a very broader scope. In case even the financial accountants also do this basically. So paying monthly TDS or quarterly advance tax payments. Look at this, quarterly tax payments made in advance. So adhering to the tax laws, not necessarily always a management accountant does. Even a financial accountant or a normal accountant can also do. Then evaluation of external effects. If there is a change in the government policy, suppose lockdown was planned for 15 days. For 1 month, they have reduced that 1 month lockdown to 15 days. Immediately, changes in government policy, you need to rework, arrive at a new decision based on the effective change right now. Correct? So all these things, you need to keep your ears and eyes open throughout wherever you go. Economic appraisal. Economic appraisals. The government makes regular announcement about the company's economic situations, and management accountants is entrusted with making the economic study and determine the influence of current economic conditions the company's operations. There is an inflation, or is there going to be a recession? If there is a recession, we need to lay off so many employees. If there is going to be an inflation, then how best we can make use of that to the company's advantage. All of this is a management accountant's work. Economic appraisal. Asset protection, obviously. So you have a company is made up of what? Assets, right? So you have so many machineries, you have so many assets, buildings, whatever it is. At the end of the day, it is also the responsibility, not an exclusive responsibility. It is also the responsibility of the management accountant to ensure that all the assets are properly used effectively for the best interest of the organization. So theoretically, they have mentioned all these things. Separate fixed asset registers for each type are maintained, and proper internal checks and controls to protect the company's assets. All these things have been mentioned here. Clear with this? Yes, fine. Now, management accountant and the modern business world. So they have just mentioned here. So now you know that there have been a lot of changes, technological advancements. It is not the same as it used to be before. Even in fact, the internet that we use today, maybe 25-30 years back, no one would have even heard about this word called internet. Correct? Just 20-25 years back. Just imagine. That is the kind of world we are living in. The changes are high. The changes are highly dynamic. Now it needs to be adapted. You need to adapt yourself to multiple situations. So under these circumstances, there has been a paradigm shift in the role of management accountant in the era of globalization. So what do you mean by globalization? They call the entire world is a global village. Now it's not like If you are living in India, you can do business only in India. No, nothing of that sort. Globalization is what the entire world is being connected throughout right now. So the trade barriers have been have been removed. And even if you're sitting in India, you can do business in the US or in the Europe, or you can do anywhere in the other rest of the world. So now the focus is shifted to strategic analysis. So multiple strategies will come up before the business. Each of these strategies should be properly analyzed. What I gave you here as an example for shutdowns is continues a very simple example. In real life, there could be so many strategies that needs to come up, and the companies, as a management accountant, you need to advise to the top boss of the company or to the board of directors of the company. They need to get a proper advice on strategic analysis. I have just blocked it here, put it in block here, because I think there is some fill in the blank questions and all related to this. So I've just blocked it here. So only this part alone. So there is something called as fill in the blanks that is applicable for your exams. What they do is suddenly they will just give one sentence inside this entire chapter. One sentence they will say, and they say the focus has shifted to dash. So they will explain the previous sentence and they will say the focus has shifted to dash. You need to write strategic analysis. Now you might think, sir, line by line should I read everything? No. That's why fill in the blanks alone is generally like this. Fill in the blank questions are alone. I think for 4 or 5 marks they will test the entire paper itself. 4 to 5 marks only if it comes from this chapter. So only the fill in the blanks that are there, you just read it automatically. That will be sufficient. Don't go word by word and waste your time. That thing itself is not even relevant. That's not required. Overall understanding, fill in the blanks separately, you just deal with it, and that will be the end of the story. Clear with this with respect to exam preparation? Fine. So now the shift as a management accountant, you need to move into strategic analysis. And fine, let me just get into this. Actually, there were multiple stages in which management accounting evolved. It didn't happen overnight. There is multiple stages. I will walk you through that. There are 4 stages through which management accounting came into picture. So right now, after whatever globalization has happened, the third stage is often referred to as a period of lost reference, lost relevance. What is the third stage? We will see in a few minutes from now. We will just be seeing. Clear with this? Fine. Now, here we will now see the impacts of new business environment on management accounting. So right now we are living in an era of globalization. So what is the impact of new business environment on a management accountant? First, you need to face the global competition. It's not just India. Right now, you need to face competitions from the outside world. You can do business in outside countries. Similarly, the other countries can also do business in India. Right now, we are going to deal with global competition. It's not just restricted to Indian subcontinent alone. Correct? So you will be posted with global competition. Changes in product life cycle. What do you mean by a product life cycle? Every product has a period. It has a tenure. It has a life cycle. Initially, it will be in the growth stage. It will be struggling. It will be struggling to enter. That is, it will be in the beginning stage. Then it enters into growth stage. It enters into growth stage, and beyond a point, it will grow. It make a lot of money. It enters into the saturation stage. Saturation means what? Now you've already captured the market. Beyond this, some new entrants will come in. Some new people will come in, new competitors will come in, and then finally there will be a decline. There will be a decline. For example, a real life example, Google. Initially, when Google started, that was a time, I think about 1999 or 2000. Google started in a phase where internet itself was not known much to the public. Correct? So at that point of time, initial 2-3 years, they were struggling a lot. Of course, none of us even would have heard of the word Google back then. Just imagine. Many of us would not even be born at that point of time. So basically, it was just struggling to enter. Then slowly it saw a growth. And then everyone started knowing Google, and Google, like literally, it's nailing it. It's killing it. It's gone a growth stage. Right now, looks like there is a saturation point. Why? There is something called as Chat GPT that has come. Some new artificial intelligent tools have come. Now it's giving a tough competition. Recently, even Google came up with one announcement that they are they are actually laying off 14,000 employees or something like that. So look at this, a saturation point. Beyond a point, there could also be a decline. It will fall. Instead of Google, some new competitor might also come. This is called as a product life cycle. Every product has a life cycle. It has to go through. No product is permanent. Then sir, I can see companies that are being existent for 100 years, companies like ITC and all is for 100 years. No, it's about product life cycle. They keep on changing the products. It's not the same product that they actually manufacture. 100 years back, whatever product they were dealing in, is it the same product they are dealing? They make some improvisations. They introduce new products. You need to be very creative there. That's why changing product life cycle, this should be one of the factors that a management accountant needs to be very aware about. Then advances in manufacturing technology. You should be aware of the latest advances in manufacturing technologies. Some internationally reputed manufacturing companies have responded to these by replacing the traditional production systems with lean manufacturing systems that seek to reduce waste by implementing just-in-time production systems, focusing on quality, simplifying the processes, and focusing on advanced manufacturing technologies, AMTs. This was also another fill in the blank question that was asked. I will explain. Now what happened? There are new manufacturing systems that companies are adopting. There is something called as JIT, JIT. What do you mean by JIT? Just in time. Now, generally what people do is, what companies used to do before the industrial revolution and all, what they used to do is they produce and store everything. They first produce, and then what happens, whenever the demand comes, they will sell. So they will produce and then they will try to push it to the market. They will push it to the market, make people buy. Right now what companies are doing is, they are not doing this. What they are doing is, once, let the customers come and approach me. Let the customers come and approach me. Only after I get a demand, I will start my production. This is similar to, if you go to a restaurant. If you go to a restaurant or a small shop, okay, a roadside shop, and if you ask that particular shopkeeper to give you a dosa, only after he gets the order, he will actually heat the dosa pan, pour the the batter, and he will prepare the dosa and give you, correct? That is called as just in time system. Only when a demand comes, the production will start and you will honor your customer. It is not like they will prepare and keep, and whenever someone comes, they will give it. No, correct? This concept is called as just in time. See, everything, the costing and management accounting concepts are all there in our real life. It's all there around us. Just that if you get the perspective right, you can look at the big picture and appreciate what the subject is all about. Are you clear with this? So reduce their lean manufacturing, this is called as lean manufacturing system. They reduce their waste by implementing just in time. So suppose he has produced everything and kept, the shopkeeper, he has prepared 10 dosas, he has prepared only 8 dosas he was able to sell. 2 dosas, what will he do? He'll have to waste it up, correct? So this, instead of doing this, maybe what he will do is, once he gets an order, he will start preparing it. So this is an effective waste reduction strategy. Focusing on quality and simplifying the processes, and focusing on advanced manufacturing technologies, AMTs. So big companies, they come up with latest technologies, artificial driven tools and all that. Fine. In fact, there was one company, an automobile company, that said, we are going to have a factory that is 100% manless, meaning not even a single human being will be sitting inside the factory. It's all going to be robots. Fine. These are all some advanced manufacturing technologies. Clear? The impact of information technologies, that needs to be considered. Then the environmental and sustainability issues. It's not that just if you focus on profit, you will be successful. Some top companies like Tata Group, if you see, they are very much concerned about the society. So social factors also needs to be considered. Look at this. Management accounting with specific focus on environmental issues is becoming increasingly important in organizations, as the environmental costs are large in many organizations. It's like polluting the rivers, or coming up with a lot of pollutants in the smoke in the factory. These might look at some silly things for you right now. Sir, what is the big deal about this? But when you get into the business, you will start understanding, or when you be a part of a bigger organization, you will start understanding how much impact this has on the business itself. You need not be such a nice person to think about the society. Even as a businessman, some people will start, nowadays they have started becoming more environment conscious, because there could be so many things. Environmental costs are often very high. Fine. Regulatory requirements impose huge fines if you do for non-compliance, and companies are increasingly realizing that being socially and environmentally responsible improves their image, and this has a positive impact on their bottom line. Bottom line means what? Profit. Top line means sales, bottom line means profit. Okay, so it improves a very good image of the company. Now as a businessman, they themselves are realizing about all these things. Are you clear with this? Yes. Then deregulation, privatization. What do you mean by deregulation, privatization? Earlier, back some 50 years back and all, every single thing was restricted by government. Everything was owned by the government. Even if you see, banks were all maintained only by the government. So it was all government owned banks, government run banks. So now what they have done, they have deregulated. Regulation means what? Actually bringing within the control of the government. Deregulation means what? They have just removed the controls. So right now, deregulation, that is the government has removed their stake in many companies, or they have come up with privatization. So they are encouraging people to start up their own ventures. It's completely privatized. So now this is a good thing, right? Of course, it's a good thing for people to come up with their own innovative ideas. But remember, this will also increase the competition, because you're not the only one with those ideas. There could be so many people who come up with these ideas. These things needs to be considered properly, so that for in order to arrive at meaningful decisions in an organization. So this is what is being given here, and the focus has shifted to what? Value creation. If you do not create value to your customer, no one will even turn back at you. A prime example is Apple. So how is Apple thriving even till date? How is it thriving till date? Apple iPhones are like too expensive, and still people are crazed of that, because of only one thing they focus on. It's called as value creation. Value creation. A person who owns an Apple mobile, he feels so great of owning this. Why? They focus on the values. How can I make a value addition to my customer? That's what they focus. Of course, as a management accountant, if you're a management accountant of a company, this thing also needs to be taken into account. Customer orientation. Of course, at the end of the day, customer is the king, and his priority, the customer's priority or customer satisfaction should be the top of your objectives. So only if you are able to satisfy your customers will you be staying in this business throughout. Are you clear with this? Fine. So these are some points mentioned theoretically. So once again, you just quickly go through it. Once we finish this lecture, you just quickly go through it. It's very, very important. Fine. You just quickly go through this. So if you see here, yes, so we did this here. Fine. If you see all these things that we have mentioned here theoretically, so what is the impacts of new business environment on management accounting? And if you see here, management accountant, the roles of management, the functions of a management accountant, it's been mentioned here. We saw this. Fine. And the differences, all these things. So you just go through it once. You need not mug up anything. Go through it once. That will be sufficient. Now, first part of this chapter, theoretically we have not seen it. Let me just walk you through that so that you get a complete understanding. Let's have a proper completeness in this particular chapter. So once again, I will just start with the initial part. Yes, fine. So now you can just take this page number 6. That's where the first chapter begins. I will just quickly walk you through, and then we will do a few questions like MCQ questions and all that, just so that the first chapter in terms of completeness is over. Fine. So conceptual understanding. So they have given a lot of background, a lot of theoretical explanation is given from an examination perspective, as well as for practically understanding the subject. Not much of relevance. Anyways, I'm just walking you through. So they have just mentioned accounting is primarily the process of, once again, I will just change the color of my pen. Yes, accounting is primarily the process of keeping records of financial transactions. It is the language through which the organizations can communicate to the external world. Look at this. They have just mentioned a few things here. Like Warren Buffett gave a valuable advice to a 17-year-old. He referred accounting as language of business. All these things they have mentioned. So only the relevant part I'm just going to walk you through. It is important to note that the users are either internal, that is the managers, or the internal people. Technically, when I say internal people, it's only the management. Fine. Or the external. The users could be internal. They're talking about accounting, not management accounting. General accounting. They are just mentioned. Look at this. They have only said accounting. So accounting users could be internal or external. Correct? So basically, if you see owners or investors, they are looking for what? They use the accounting data to come up with, to know the profitability or the financial strength of the company. Profitability through P&L, financial strength to your balance sheet. Management, they want to make some internal decisions. For that, they use accounting decision. By accounting, I mean financial accounting or cost accounting or management accounting. They are just being very broad here. They are not being very specific. Creditors, why do they need accounting information? To take short-term as well as long-term position of the company. That's why you know the credit worthiness of the company. Regulatory agencies, income tax department, GST department, why do they need to know? Tax assessment and how well the business are operating under the regulatory framework. That is how compliant they are, compliance purpose. Government in general, for compiling statistics, how many companies are there in our country, and how many companies are unicorn startups. You know what is unicorn startups? So company that has a valuation of $1 billion or more is called as a unicorn startup. So how many companies are like that? So many things, so many parameters for compiling statistics the government might use apart from the taxation aspect and the regulatory aspect. That's why they are, technically speaking, both are the part of government only. They have segregated the regulatory agencies separately and government separately. Clear? Potential investors, why do they need the accounting information? For finding out, gauging the investment opportunities. Employees, why do they need it? So because they might be interested in knowing the earnings of the enterprise, because their remuneration might depend on the quantum of profits. Researchers, to do some research, fine, they need some accounting information. Look, this is not exhaustive. There could be so many other users of financial data. They have just mentioned it here. So it is obvious from the above that the accounting information need of management, is different from others. The management encompasses the range of activities involved in running an organization. Broadly, there are 3 levels of management. Top level, that is the board of directors. Middle level, the managers. Lower level, that is the workers generally. Fine. Through the financial information need of the 3 levels, fine. Though the financial information need of the 3 levels varies, but the essence is similar. What is the essence? Decision making. So broadly speaking, though there are so many users of financial information, we saw employees, researchers, government, regulatory bodies, your creditors, management, you have your owners of the company, all these people are there, but management's requirement of data is slightly different. That's why we have a separate branch of accounting called as management accounting, with an objective of what? Decision making and control. I told you that decision making and control. The top level management is entrusted with the critical task of making effective and efficient decisions, which is reflected in the company's performance and is measured in terms of profit and market share. So that's why even our CMA Institute says behind every successful decision there is always a CMA. Are you clear? There are 3 branches of accounting: financial accounting, cost accounting, management accounting. Fine. And this categorization is based on the presentation, legal requirements, financial information that is required for each of these categories of branches of accounting. Clear? That's what we saw. And management accounting is concerned with the provision of accounting information to the people within the organization. Internal users, typically the management, to help them make better decisions and improve the efficiency and effectiveness of existing operations. So it is often related to what? Management accounting is often related to internal reporting. Are you clear with this? So what is management accounting? Many people have given their own definitions. Fine, but you should know basically it is presenting the accounting information in such a way that helps the management take meaningful decisions and enhance the control in our organization. That's what it is. I've explained it practically. Of course, theoretically, they have given some, in the material, they have given some definitions. The management is all about running an organization. Management is about running an organization in consonance with your strategic goal. Consonance means what? At par with your strategic goal. Accounting may seem to encompass any of the activities that attempt to gauge the performance of the organization. So gauge means what? So validate. So how good the company is performing. Correct? In this sense, management accounting includes production of all the information useful in running the organization. So any information, presenting an information in a manner useful for taking decisions is called as management accounting. If you see the information provided can be financial or non-financial, it can be accurate or broadly correct. Why broadly correct? You're talking about futuristic data. You cannot say accurately it will be exactly next month demand will be 1000. I cannot say. It can be 990 or it can even be 1050. I don't know. Broadly correct. It's a calculated guess. Correct? Then as actual or estimated, yes, based on past or future. So like that, they have just given all these things, the information, how the nature of information used in management accounting, all these things are mentioned here. Are you clear with this? So they have just mentioned here. And remember, there is something called as a body called as CMA. What do you mean by CMA? CIMA, Chartered Institute of Management Accountants. This is globally acclaimed as the global CMA body. So just like how you have ICMAI in India, you have the Institute of Cost and Management Accountants of India. You have similarly the London version of our CMA Institute is called as CIMA. CIMA, Chartered Institute of Management Accounting. It is the #1 institute in the field of costing and management accounting. Fine. So they have something called as CIMA official terminologies. They define a lot of things. They state that management accounting is the application of principles of accounting and financial management to create, protect, preserve, and increase the value of stakeholders of for-profit or not-for-profit enterprises in the public and private sectors. Basically, what is this? Providing some accounting data in a manner that helps the management to take meaningful decisions in their organization. Of course, the objective is also about control. Clear? Fine. So they have just given so many things. It requires identification, generation, presentation, interpretation, and use of relevant information to inform the strategic decisions, formulate business strategy, plan long-term, medium-term, short-run operations, determine the capital structure, design reward strategies, inform operational decisions, control operations. They have just mentioned a lot of things. Broadly, it bogs down to two objectives: decision making and control. That's all you need to know. Clear with this? Fine. Now there are multiple people, individual people, they give their own definition. So now one such person is called as Colin Drury. Colin Drury is a very famous professor and an author in the field of cost and management accounting. Even I refer his books for so many examples. He is supposed to be a very elderly person. It's a very old person now. So he has come up with his own books on cost and management accounting. So he states that management accounting combines the accounting, finance, and management with leading edge techniques needed to drive successful businesses. So he has given his definition and what it involves: advising managers about financial implications of project, explain the financial consequences of business decisions, formulate business strategy, monitor the spending, financial control, conduct internal business audits, explain the impact of competitive landscape, bring a high level of professionalism and integrity into business. So what it involves, broadly he has explained. Again and again, I'm telling you, broadly it revolves around what? So providing an information to the top management that helps them in two objectives: decision making and control. You just have that in your mind. These are all some theoretical aspects that is given in your study material. Clear? Fine. And so management accounting again refers to presentation of accounting information to the management by the management accountant in such a way to assist them with their managerial decision making, planning, and control. This is exactly what I said. Correct? So they have just given this, and the purpose of management accounting is to assist the management in running the business in ways that will improve the performance of the business. Now, if you look, they have just given similarly. Right now itself, you've seen multiple definitions of management accounting. Well, a few more definitions, a few more people. Garrison and Noreen, these two people have come up with their own definition. Wilson and Way, they have given their own definition. Johnson and Kaplan, they have come up with their own definition. And look at this: Ongren, Datter, and Rajan, they have come up with their own definition for management accounting. So all these things you can quickly go through, but beyond this, there is not much of a relevance here. Next. So based on all these things, one thing that you know, look, this is actually a next paragraph. The above mentioned definition put forward by the authors sums up the discussion of what management accounting is. There have been some significant changes in the last few decades. So last few decades, like global competition is there, deregulation, government has stepped out, they want to privatize everything, growth in service sector, decline in product life cycles. There are so many things that are involved. These changes have significantly altered the way in which firms operate, which in turn has resulted in changes in management accounting practices. Clear? So this has resulted in companies making customer satisfaction as an overriding priority and to focus on identifying and achieving the key success factors that are necessary to be successful in today's competitive environment. So basically, right now it all bogs down. I told you, customer is the king. Customer satisfaction is the overriding priority, topmost priority of any business. Clear with this? Fine. So now the scope of management accounting, it's all mentioned here. Business budgeting, planning, forecasting, measuring organizational, divisional, departmental performance. So all these things, broadly it bogs down to your decision making and control. You name all the chapters, it will come here as the scope of management accounting. Look at this: budgeting, planning, forecasting, name of a chapter. Divisional performance, that's basically your you have a chapter called as transfer pricing. We'll be seeing that. Even there's a separate chapter called performance evaluation and all of that. Fine. So all these things they have just mentioned for theoretical purposes. Calculating the profitability of multiple products, allocating cost of products, interdivisional transfer prices. There's a chapter called transfer pricing. So all these things they have explained it in a much detailed theoretical manner. You can just go through it once. There is no point in me reading it line by line. Now this part they have asked this particular part, evolution of management accounting. This is basically the history of how management accounting started. This part they have tested a few in your MCQs, multiple choice questions, true or false, as well as in your fill in the blanks. Some aspects have been involved here. Let us just quickly look at this. Management accounting is an offshoot. Mean what? It's a product. It has come only from financial accounting, and it has specific linkages with cost accounting. This is why I said it is highly interlinked with cost accounting. Look, it's there in the study material itself. All these wordings are study material wordings. I have not changed anything. Financial literature suggests that the beginning of management accounting is linked with the requirement of accounting information to optimize the economic resources during the Industrial Revolution in the United Kingdom. So we are just going back to history. So how this all started? Only during the Industrial Revolution in United Kingdom. So the management accounting that we are studying right now was not there maybe some 80, 90, 20, 100 years ago. It was not at all there. It is relatively a very recent development in the line of accounting itself. Clear with this? Now there is something called as International Accounting Federation, IFAC. So they have described the evolution of managerial accounting through 4 phases. Evolution means what? How it has come, the history, how it has come. So they are saying 4 stages. It has come in 4 stages. First stage, prior to the 1950s. Okay. Second stage, 1950s to 1965. Third stage, 1965 to 1985, and fourth stage is 1985 till date. So they have classified the evolution into 4 stages. Quickly, let's run through this. There is not much of value addition, but you should know where it all started. Just to set the context right, it's very much a part of your it's very much a part of your syllabus. So all these things will definitely not have an impact on the other chapters. I told you, I gave that explanation initially. With that explanation itself, you can enter into the subject. But we are doing all these things right now. I'm going to the theory part because it is mentioned in your study material, which is a part of your syllabus. So that's why we are doing it. First stage, prior to 1950s, it was called as classic era. Classic means what? Old, vintage, traditional. Fine. Now the focus was on cost determination, financial control. They didn't even think about management. Anywhere that the word management comes in, no. Find out, calculate the total cost and make some decent amount of control. That was the objective before 1950s. Production technology was very simple, and products passing through a number of distinctive process, and societies produce relatively homogeneous product. Homogeneous means what? Similar products that consumed the same amount of resources, and identifying the cost of the work and material was very easy, and the process were driven by speed of manual operations. Labor oriented. Technology itself was not there. So at that point of time, the focus was on cost determination and financial control. That's all you need to remember. Now, between 1950 and 1965, for the next 15 years, now this is referred to as the age of information for management planning and control. They slowly started realizing just the cost calculation, financial control is not relevant. You need to prepare some information for management, planning and control. That is very much important. So this phase is characterized by the use of traditional accounting management techniques that support decision making and responsibility accounting. So techniques such as standard cost, profitability analysis. We will see standard cost means what? The overall per unit you can maximum incur 10 rupees. That is called as a standard cost. Correct. Profitability analysis. If you produce product A, this will be the profit. If at all, instead of product A, if you produce product B, this will be the profit. So product wise profitability, or it can even be location wise profitability. Branch A, branch B. I want to open a new branch. If I keep it in location A, this will be the profit. If I keep it in location B, something else will be the profit. Which is better? So all these things were introduced in the second stage, that is actually between 1950 and 1965. And here they paid less attention to external business environment. That's how it was evolved, So slowly only it got evolved. First, management decision making itself is not relevant, is not even taken into account in the first stage. Slowly in the second stage, they started realizing the importance of that. Now in the third stage, that is for the next 20 years, 1965 to 85, the focus was on reduction of waste of resources in the production processes by eliminating the non-value added activities. So for you to produce a product, convert it into from RM to FG, from raw material to FG, there are a lot of activities that needs to be taken. Now what they did was they started analyzing every activity. They classified the activity into value added activity and non-value added activity. What do you mean by value added and non-value added activities? An activity that adds value to my production process is called as a value added activity. An activity that does not add value to my production process is called as a non-value added activities. They identified this and they were actually focusing on removing all the non-value added activities. Are you clear with this? An example of non-value added activity could be, suppose for example, in the factory, suppose they are storing the raw material, let's say in a factory is a very big place, correct? It runs into acres of land. Let's say they are having the raw material stored in one corner of this land, and 2 kilometers away they have the production facility. If you go inside a factory, it will run into kilometers. Okay, in real life, you go into a factory, it runs into kilometers. Now, every time I need to start producing, I need to come 2 kilometers, pick the raw material and start the production. Now, this is a non-value added activity. Now, based on this, what the company will do, now they will shift it to a location. The raw material storage area might be shifted to a location that is very near near my production area itself, so that every time you want to take your raw material, you need not spend that much amount of time. It's a waste of time, and of course time is money. You need to have a particular forklift truck or something like that to bring it. Fuel waste, time waste, that laborer who is driving the truck, for him the salary is going waste. So these are also non-value added activities that got removed right now. So, and the priority for the companies was to adapt new business environment. So companies began to seek both cost reduction and quality improvement. At the same time, the use of robotics and the computer controlled processes enabled the companies to improve their quality, and in many cases it had an impact on the cost reduction. So if you remove all your non-value added activities, obviously you come up with your cost reduction. And now in the fourth stage, that is 1985 till date, they have mentioned here 2000, but on the top they have mentioned till date. Actually, it's till date only. The focus was creation of value through effective resource use. So creating value through the effective use of resources. So during this period, technological innovations were at the forefront and competitions were intensified. You know that technology has advanced, and now because of privatization, globalization and all, everyone, left, right and center, people have their own startup ideas and all of that. So competition was also intensified. Here the focus is on value creation. That's the order of the day. And managerial accounting techniques that dominated this period were ABC, activity based costing, just in time, target cost, balanced scorecard, value chain analysis, strategic management accounting. All of this, what it is and all, in the respective chapters we will be seeing. In fact, target cost and all is a part of your CMA final syllabus. Activity based costing, that is chapter number 2. The next chapter will be seeing. So certain areas we'll be seeing here, certain areas we'll be seeing in final. So in the fourth stage, where the entire focus was on creation of value That's when they came up with advanced tools that we use currently. That's a part of your syllabus. That's when the real management accounting got evolved. Are you clear with this? So they have just summarized this entire thing by way of a chart. Stage 1, cost determination and financial control. That was the focus. Stage 2, slowly information for management, planning and control. That was the objective. Stage 3, reduction of waste of resources in the business process. That is what I told you, this value added, non-value added activities and all. And final stage was regarding the creation of value through effective use of resources. This is all about evolution of managerial accounting. You will see some MCQ questions are there. Okay, so the distinction between stage 2, 3 and 4 is that the shift of focus from providing information to the management to the in the form of loss reduction. So look at this, the shift of focus from providing information to the management in the form of loss reduction to I'm just repeating, the shift of focus was from providing information to the management. This is how they started. Now the focus is on loss reduction and value creation. Look at this, loss reduction and value creation. So the shift earlier was what, providing information. Right now it's about value creation. So if this is your objective, value creation through effective use of resources, all other things are automatically taken care of. If you want to create a value, you need to effectively use your resources. For you to effectively use your resources, your waste reduction should be in place. For you to do that, obviously a proper decision making should be done, for which information should be provided to management. So this is a very broader scope. That's why we are seeing all these things as a part of our syllabus right now. So now what institute has done is they have just mentioned this entire phase into 4 phases. They have mentioned it in a tabular column. So first phase, second phase, third phase and the fourth phase, or the stages. Fine. So they have mentioned the objectives here on the top: cost determination, financial control, information for planning and control, reduction in waste of resources and in business operation, and creation of value through effective use of resources. So they have just mentioned what are the techniques that were adopted during the respective period. If you see in the first phase, for cost determination and accounting, they used cost determination, standard costing, direct costing, records of cost accounting, allocation of indirect cost, uniform costing, absorption costing. All these things these are some techniques that were utilized during those period of time. Typically speaking, these are all confined to cost accounting. If you see absorption costing and all, it's all mentioned in your cost accounting syllabus, because earlier in stage 1 it was about finding out what is the cost of a product. They didn't even enter into management accounting. Of course, the planning tools were budgeting, controlling tools, return on investment, something called a ton mile ratio and all they were just using. Strategic analysis and all were not even done in the first phase. Correct? In the second phase, what happened? They started coming up with certain developments, standard cost accounting developments. Look at this, marginal costing, target costing and all is there. Target costing is a subject matter we will study ideally in your CMA final. Application of discounted cash flow, transfer costing, basically your transfer pricing, we will be seeing it here. Responsibility accounting, then Gentani system, Kaizen costing. These are all again a final level area. Of course, Kaizen costing is one costing with costing system that was introduced in Japan. It focuses on continuous and steady, small and steady improvement. We will see whenever it is applicable, we will see it right now, right then. So these are all some techniques that were evolved in the phase 2 of the evolution. And in the phase 3 of the evolution came the activity based costing. We will see in the next chapter called as ABC, activity based costing. It's popularly known as ABC. So in activity based costing, we will talk about what are the multiple activities there, the value added activities, non-value added activities, everything will be seen. Non-value added activities will be removed. All of that we will be seeing. An activity based management was involved there. And then Kaizen costing, application of Kaizen costing, just in time, all these things came only in the third stage. In fact, there is a question regarding this. I think there is a MCQ question regarding this. Activity based costing and just in time, when it came, in which stage? It came in the third stage of your evolution. Clear? And of course, with respect to strategic analysis, slowly in the third stage, they came up with something called as life cycle costing. And finally, in the fourth stage, you have something called as value chain analysis, 5 forces model, PEST SWOT analysis. SWOT means what? Strengths, weaknesses, opportunities and threats. So these were all involved extra apart from the normal things. So this is how the management accounting as a branch of accounting has evolved. Initially, there was nothing with respect to strategic analysis. Slowly, in the third phase, they started something, and in the fourth stage, currently, we have a lot of tools and techniques for the purpose of strategic analysis. Are you clear with this? Yes. So this is broadly about, of course, look at this. In the fourth stage, you have customer profitability analysis, competitors analysis, your balance scorecard and all. If you look at this here, traditional tools, financial statement analysis, cash flow, managerial, marginal costing, absorption costing, standard costing, and so on here. But in contemporary techniques, new techniques, you've got target cost, just in time, total quality management. It's called as TQM. Theory of constraints, value chain analysis, benchmarking, SWOT analysis, balance scorecard, and Kaizen costing. So all these things are right now a new part of new evolution of management accounting. So what is all these things? We will see. That is what the subject is all about. Are you clear with this? Yes. And of course, if you look at this, the focus is now on strategic decisions and value creation. Strategies are long-term plans which help an organization realize its goals. And of course, it's defined as a general direction set for the company and its various components to achieve a desired state in the future. So now some companies, what they do is, so with respect to strategic decisions, there are broadly two strategic decisions, which technically is a part of your strategic management paper. You have a separate paper for that, I think for 50 marks. It is not a part of our thing, but anyway, since it is related, there is also strategic management. We are talking about management accounting in this area. Somewhere it's related. There is something called as a cost leadership strategy, and there's something called as product differentiation strategy. What do you mean by that? Cost leadership strategy means now capturing the market by way of reducing your prices. A typical example is Tata Nano. What they said, they wanted to capture the market by way of giving a very economical car, a very cheap car, 1 lakh rupee car, very economical. So Tata opted what? A cost leadership strategy. Whereas if you see, so that way also companies have become successful. Some companies have become really successful by following cost leadership strategy. Some companies follow product differentiation strategy. These companies are not bothered about the cost. They want to come up with innovative products and they will only price that product very high. Typical example is Apple. If you see, Apple focuses on product differentiation. They were the first ones to come up with a touch phone and they made a completely new evolution. They had the first mover advantage. What do you mean by a first mover advantage? They were the first ones in the market to come up with something like a touch phone and all of these things. No one ever came up with it. Correct or not? Yes. So they focused on your product differentiation. These companies offered differentiated or unique products that appeal to their customers. The products are often high priced than the products or the services of the competitors. So if the product is high priced, then why will people buy? That's where you make a product differentiation. Now you see, Apple is very successful. So for a company to be successful, they can go with a cost leadership strategy or they can go with a product differentiation strategy. Cost leadership strategy means go for a lower price your products very low. So that way you capture the market. In case of a product differentiation strategy, it means what? Price your products high, but here the focus is on coming up with different new creative products in the market. Clear? So these two are mutually exclusive. You should decide which one is better for you. That decision, who helps the top boss of the company to take this decision? As management accountants, we all need to, as management accountants are the ones who are required to actually advise the company as to which is better, which method we can follow. Cost leadership we can follow, or we can follow this one. That is a product differentiation, for which there are so many things that needs to be considered. Who are the most important customers? What are the substitute products available? What is the most critical capability of the company? How can we leverage it for the new strategic initiatives? And will adequate cash be available to fund the strategy? There are so many things that goes behind which decision you want to take. That is a cost leadership strategy, or you want to go for a product differentiation strategy. All these analysis will be done by a management accountant. And of course, all this part we have done, management accounting versus cost accounting. We have just done all these things. We just did. And cost accounting versus management accounting also, we have just done this. We have done all of this. And yes, all of this has been done. Role of a management accountant in the normal business world, new business world. We have seen this all. And management accountant in the normal in the modern business world. I told you here, under the changes in circumstances, there has been a paradigm shift in the role of management accountant in the era of globalization. The focus has shifted to strategic analysis. I told you it's about deciding between a cost leadership strategy or to go for a product differentiation strategy. And if you see the third stage, now I'm connecting the dots. The third stage of the evolution of management accounting is often referred to as a period of lost relevance. Why? Because a complete new changes in technologies and all happened after 1985 only. That's why the third stage is often referred to as the period of lost relevance. The fourth stage came up with a lot of advanced technologies and all of that, and that is the reason why the fourth stage came up. Currently we are in the fourth stage, that is it came up with a lot of technological advancements. The third stage is actually a period of lost relevance. This has been mentioned here. Clear? And of course the impacts of new business environment on management accounting, all these impacts I have just explained you. In fact, I think there is one question, the lean manufacturing systems, that also we saw there. Finally, let us just see what are the questions that are there. We will just see it. Yes, we have just finished this. Theoretically also we have finished, but understand, practically speaking, this chapter is all about, this subject is all about providing information to the management. It is that line of accounting that provides information to the management that helps them take meaningful decisions. Remember the example that I gave you, the shutdown versus continue example. Look how beautiful it is and how practical and relevant a management accountant can be of in a real life. So management accounting, management accountants are not replaceable. Any real life, any artificial intelligent tools, let it come, even that cannot replace the job of a CMA. That's my honest opinion on the future career options available for a CMA. Now let's quickly run through the MCQs, the multiple choice questions. So management accounting, what? Management accounting accumulates, summarizes, analyzes the available data. It is primarily concerned with the requirements of the management, correct? Makes the corporate planning and strategy effective. All of the above, obviously. Management accounting, all of the above. It relative answer only, so it focuses on all the three, so it's only going to be all of the above. Management accounting can be viewed as marketing oriented accounting. Absolutely not. Management oriented accounting, absolutely yes. So some very easy thing has been given. Accounting oriented management, manager oriented accounting. Obviously they have just given some permutation combination, but it is management oriented accounting. Then the main objective of management accounting is to maintain accounting records. Absolutely not. That is the scope of financial accounting. To know the amount due from the customers and suppliers. Absolutely not. Now, to ascertain, analyze and interpret the results of the business operations. Absolutely. C is only the right answer. To record all business transactions. Absolutely not. That is also not the objective. Dash is the study of managerial aspects of financial accounting. It's a management accounting is that study. The purpose of management accounting helps dash to take decisions. Managers, investors, marketers, banks. Obviously, these three are all outsiders to the company. It's about managers, internal people, or the top boss, managing directors, also called as managers. Fine. Management accounting assists the management in planning, yes. Directing, yes. Controlling, yes. All of the above only should be the answer. Clear? Some easy questions have been given here. The period of lost relevance is the dash of the evolution, of management accounting that happened in the third stage. I told you, because fourth stage had a lot of technological advancement. That is the current era. So from the third stage, the fourth stage, we moved. The focus is on value creation, strategic analysis and all. So the third stage is often called as a period of lost relevance. We saw that. Creation of value through effective use of resources. I told you this value chain, that is your value added, non-value added activities and all, that we saw in the third stage. Correct or not? I told you, in a factory, corner of the factory, they have this 2 kilometers away from the production facility, they have this particular raw material storage area. They need to shift the area and all. I told you, right? Yes. So that focus was done in the second stage. Then just-in-time management and ABC developed during the fourth stage. If you see here, if you see the tabular column, you will be seeing, look, we saw this once again. We saw this somewhere. I think in the fourth stage, we were talking about, in the fourth stage, we were talking about, second, I think it's a fourth stage or third stage. One second. Let us quickly, I think the answers have also been mentioned here. So here it's going to be C. Okay, it's going to be C. It's not the fourth stage, it is the third stage. I'm sorry, I stand corrected. This is the third stage. In the third stage only, just in time and ABC developed. It developed during the third stage. Anyways, I've given the answers here. It developed during the third stage. I will show you here. One second, I will show you here. So it is mentioned, look at this. Look at this. In the third stage only, this is the third stage. During the third stage only, activity based costing and just in time came in. Correct or not? So using the tabular column, you can just answer it. So don't worry, all this fill in the blanks, MCQs, true or false or not, you just go through what is given here itself. That will be sufficient. That will be sufficient for examination preparation. I don't think they will ask you beyond this. Then management accounting deals with dash data, both qualitative and quantitative data. We know that it deals with both qualitative, quantitative data. True or false? Management accounting is primarily not concerned with the requirements of management. What is this? Absolutely, this is false. It is concerned with management only. One of the main characteristics of management accounting is the cause and effect analysis. Yes, true. Next, management accounting is mainly past oriented. Absolutely not. It also relies on past data, but it's future oriented only. So this statement is false. The primary objective of management accounting is to manage the company account and improve sales. What is this? No, it is about decision making and control. Key success factor is also known as, right now, competitive analysis. Right now in the current era, is about what? Value creation and face the competition. Yes, this seems true, so we will put it as true. Key success factors, also known as competitive analysis. Yes, true. Benchmarking is a process of measuring the performance of a company's product or services or processes against those of another business considered to be in the best of the industry. Now, this benchmarking, we didn't see it anywhere in this chapter 1, but there is a separate area for benchmarking. We will see that. What do you mean by benchmarking? Suppose you see that, there is one, let's say there is one student who studies really well, scores high marks. Now what our parents will do? Now see, you should also study like that student. So they will say, they will benchmark that student. They will say, you benchmark, you should be like him. You also try to do that. Whether it's right or not, I'm not getting into that. But in real life, what companies do is, look, what they say is, look, fine, let's say I'm starting a mobile manufacturing company, a new company. I will benchmark Apple as a benchmark. I will keep them as a benchmark. Look, they are focused so much on value creation. Let's benchmark Apple and let's also progress towards value creation. Look at this. Benchmarking is a process of measuring the performance of the company's product or services or process against those of other business considered to be the best in the industry. So Apple is best in the industry. I will compare Apple's product with my product and see where I lag, so that this will help me to improve further in the business. Correct? So this statement is true. We have not seen it technically speaking. So I have just copied paste all these things from the institute study material. Ideally speaking, in the chapter 1, this benchmarking was not seen anywhere. Anyways, they have just kept it. We will also do. I think so. It is not mentioned anywhere. Anyways, logically you can answer. In organizations, there are typically 3 levels: top, middle, and lower level. First level, yes, true. Then management accounting concentrates on post-mortem analysis. Absolutely not. Post-mortem means what? Past analysis. False. It is futuristic driven. Evaluation and control of performance is not a limitation of management. What is this? Evaluation and control of performance is not a limitation. Obviously, how can that be a limitation? If at all it is mentioned, it should be mentioned as advantages only. Okay, so anyways, what kind of a question? I don't know. Evaluation and control of performance is not a limitation. Correct, it is not a limitation. Fine. Look at the question. I mean, that is very lame. Next, deregulation. We know that the act or process of removing the legislative controls or restrictions from an industry, commodity, etc. True, obviously. So government removing their controls on any particular industry or a company on the product is called as deregulation. So all the answers are also given here. Fill in the blanks. Lean manufacturing system that seeks to reduce waste by implementing dash production systems and focuses on dash. We saw that I underlined one area and I told you lean manufacturing system. It seeks to reduce the waste by implementing JIT manufacturing system, just in time. I gave that restaurant example. Only after you place an order, he will heat the pan or tawa and he will actually prepare the dosa and give you. Basically, this is a pull system. That is, only if a demand comes, I will actually produce the product. It is not a push system where product is produced and pushed into the market. Let the demand come and then I will produce it. There has been a paradigm shift in the role of management accountant in the era of globalization. We saw that the focus of shift is towards strategic analysis right now. Okay, I think I have not finished this. Lean manufacturing systems that seek to reduce the waste by implementing JIT production system and focuses on what? Advanced management technologies. So we saw this line earlier. I showed this to you. Lean manufacturing system towards advanced manufacturing technologies. One second, if you want, I will show it to you once again. I think look at this. So in page number 23, lean manufacturing systems that seek to reduce the waste by implementing the just-in-time production system focuses on quality, simplifying processes, and focusing on advanced manufacturing technologies. Now you might have a question, sir, in this entire book, there is so much, in this entire chapter, so much of theory is there. Now in one sentence alone, they are giving like this. How will we know, sir? Absolutely. How will you know? See, if they are giving something logical, MCQs, true or false, you can write. Now, this is one challenge with respect to fill in the blanks. What I will suggest is you only do the fill in the blanks that is given in the study material. For chapter number 1 alone, I have kept it here. For the remaining chapters, generally, it is all quantitative. That is your questions. Question and answers will be there. Numerical problems will be doing. So the discussion on the fill in the blanks or all these things is not generally clubbed along with this. So what you need to do is basically you stick only per chapter 5, 6 fill in the blanks is there. That alone you study and go, because beyond this, nothing much can be done. Fill in the blanks, they can ask any sentence. What you will read sentence by sentence and mug it up? Absolutely, it doesn't work like that. So fill in the blanks alone, you strategize it for your exam preparation. Whatever we are doing in the classroom, that is sufficient. Clear with this? And of course, certain things is mentioned in the study material. If you just go through it, that alone is sufficient for fill in the blanks portion. Clear? Next. Yes, there has been a paradigm shift in the role of management accountant in the era of globalization, and the focus has shifted to, yes, strategic analysis. We saw it somewhere. Next, management accounting ensued with the simplest aspect of cost determination and financial control. Cost determination and financial control. This was also mentioned somewhere. I highlighted to you. So please, these 5 fill in the blanks alone, you just accept what is given here and you just prepare it accordingly. Beyond this, fill in the blanks, you need not prepare specifically. It is practically, humanly not possible. Clear? So here, cost and management accounting ensured with the simplest aspect. It just started off. Yes, we saw this, right? In phase 1, what was the basic objective? It started off with, it ensued means what? It started. It started with what? In phase 1, that is stage 1, phase 1 started with cost determination and financial control. You just need to write that. You remember that? Yes. Strategic management accounting provides the financial analysis to support the formulation of successful competitive strategies. They have mentioned here as competitive strategies. So here, strategic management accounting provides what? It provides financial analysis to support the formulation of successful competitive strategies. Fine. You learn certain things from fill in the blanks from an examination perspective. It's absolutely fine. Don't worry about it, because it's practically not possible for you to read line by line and remember what every line in the chapter says. Absolutely not possible. Clear? Next, dash criteria. Dash criteria are a set of standards for a company's behavior used by socially conscious investors to screen the potential investments. It's called as ESG. That is environmental social governance. Environmental social governance is criteria, is a set of standards for a company's behavior used by socially conscious investors to screen the potential investments. It's called as ESG. I will show you where we saw this. ESGs, I told you in one part, no, where it is not just about making money. You also need to be very environment conscious. Look at this. Sustainability issues. Look at this. ESGs has become the focal point in the operations of companies. Basically, this is what? Specific focus on environmental issues. It is becoming increasingly possible. So what do you mean by ESGs? So it is mentioned only here. Once again, I'll just see this here. ESG, where is it mentioned? ESG, this is mentioned. Look at this. If you look at your study material, ESG is mentioned in this page. Fine. Apart from that, it is mentioned in this MCQ only. So I think the full form of ESG also here only it's mentioned. So you need not have to worry. So by way of fill in the blanks, institute wants you to learn a few things. That's okay. Let's keep it like this. These 5 areas alone you prepare for fill in the blanks. But for that, everything conceptual knowledge itself is sufficient for you to tackle the questions. So ESGs means what? Environmental, social and governance criteria are the set of standards for company's behavior used by socially conscious investors to screen the potential investments. So this is what is given in first chapter. Broadly speaking, we saw a lot of theoretical aspects in this chapter, but to sum it up, whatever we saw initially is what is actually required for you to enter into this particular subject. We saw that this accounting itself has 3 broad branches or disciplines. We have financial accounting, cost accounting and management accounting. And management accounting is that branch of accounting that provides the information to the management that helps them take meaningful decisions. And we saw an example of shutdown versus continue, how the manner of presenting the data itself can help the management to take a meaningful decision. So a normal accountant said, if you continue, you are going to incur a loss of 10,000, so shut down. But no, what it is, if you shut down, the management accountant says, if you shut down, the loss is going to be 15,000. If you continue, the loss is just going to be 10,000. It's better to continue with the loss of 10,000 than to shut down with the loss of 15,000. Here, management accountant is properly advising the company to continue the business for the next 1 month. Even if there is a loss of 10,000, there is only, you are still going to prevent yourself from a loss of 5,000. That's why I said the overall objectives of management accounting are twin in nature. What are the 2 objectives? Decision making and control. So on this note, I'm concluding this first chapter. The first chapter is over. Lot of theoretical aspects were involved in this chapter from a bookish perspective. From a book perspective, yes, chapter 1 had a lot of theory. You just learn those, just go through it once, try to attempt the MCQs, fill in the blanks true or false and leave it there. But from a conceptual viewpoint, please stick to this example. Please stick to this particular explanation that I've given you. I have annotated here. This I will be giving it to you. Whatever I have annotated here will be provided to you as a PDF copy. You can have it. Clear with this? That will help you to understand the subject in a much better manner. And please don't think that this is going to be a theoretical subject. This is 100% a practical paper. We will be seeing a lot of decision making and control related aspects. In fact, I even figured out and showed you one example where we did some numerical thing only. So on that note, I'm concluding this session where we saw that overall objective of management accounting is to assist the management with 2 aspects, that is decision making and control. So on this note, I'm concluding this session. I will see you all in the next video with a brand new chapter. Thank you all so much and have a great day.